I don't know if you saw Jim a couple of minutes ago. He's very concerned about semiconductors. What do we need for, that's just one aspect of technology, but technology is out of favor. What do we need? A pandemic for technology to work again?
Well, if you see slower growth, then you're going to probably want to find some more growth names. But we have a ways to go, Joe, on technology in general. I don't own any semis, by the way, and I haven't for a couple of months because I was very nervous about double and triple ordering, and that hasn't even begun yet. So I think you want to be very, very careful, selective in technology. I really liked the Accenture quarter last week where they slightly lowered the high end of guide, but that was because of FX, not demand. I really like IBM. IBM has been a champ in this environment. It's up 7% year to date. I still like the cybersecurity names, and Fortinet is a name there that I like a lot. And I own Meta, which is very cheap, and I think pricing in just kind of doomsday at this point.
Stephanie, are you feeling like buying or selling in general? I don't know. Would you raise cash at this point, or you just sort of, I guess, just stick with your program, try not to be emotionally involved in the daily moves?
Yeah, no, look, I mean, we have to wait for earnings. I don't think earnings season for the second quarter is going to be a demand problem. As I just mentioned, Accenture, look at Nike. Even they said demand was not a problem. CarMax, General Mills this morning, 13% organic growth. What the problem is obviously the cost side of the equation and then currency. So we got to watch and wait and see. But I want to own companies that have pricing power and benefit from higher commodities. What's that? That's obviously energy. I think their earnings are going to be spectacular. Materials as well. As I mentioned, General Mills, I think some of the consumer staples, they have pricing power for the time being. I like Hershey, I like Pepsi, even Coke I've owned in the past. Might get back into that one. Procter & Gamble if it comes down. These are all names for the longer term. And then, of course, you look at the discretionary names, they're pricing in way past a recession. Target, Starbucks, Nike, as I mentioned. I like those, and I've been nibbling at those on the way down. And then I own, or I just recently bought Berkshire. Trading at 1.2 times book for quality company, great balance sheet, huge free cash flow, and a diversified business model.
You think in 2024 we'll be saying, well, the 2022 recession or the 2023 recession, do you think that is a given or not necessarily?
Yeah, I mean, I think I don't know if we're going to see a recession this year. I don't think so, because I do think there's enough momentum from all the stimulus that we put in place over the last 2.5 years. It takes a really long time to get that into the system, right? So I think maybe we can eke out 1 to 2% in terms of GDP this year. But yeah, next year, definitely, there's some sort of real problem when you have a hawkish Fed and a slowing economy at the same time. And there's not much they can do in terms of inflation unless they really put the kibosh on the economy. So 2023 is a little bit more murky, but I do think down 20%, the market is starting to tell you that, right? And again, some stocks are down 30, 40%. So I think you can nibble for the long term. And I think by 2024, we'll be glad that we did.
We still don't really know whether inflation is kind of quasi-transitory because of the war, because of the reopening and the supply chain. It still could be more transitory than systemic, unless you believe that we printed so much and spent so much that we've got years to work that off. And if the Fed is fighting the energy issue that it can't really control anyway, then it's not even doesn't even have its eye on the right cause of things. So it's very difficult right now.
It's a really tough time right now. You have to look at quality companies, good balance sheets, good free cash flow. But that doesn't mean that they're not going to go down. They may not go down as much as some of the high flyers, right. But you got to be very careful, very selective. I'll have a bit of extra cash on hand to buy on the dips.